Well, Nigeria has postponed its planned raising of about $950 million in overseas bonds owing to unfavorable market conditions during the time frame approved by the fundraising. Finance Minister Zainab Ahmed said in April that the government intends to sell the bonds as early as May and its second external debt this year to help plug fiscal deficits. Now, the planned $950 million bond sale would account for the balance of $6.1 billion in overseas borrowings scheduled for 2021 after it raised the second tranche of $1.25 billion in March. Now, Africa's biggest economy is one of the first sovereigns expected to tap into the Eurobond market after the start in late February of Russia's war on Ukraine. Now, still the increased commodity prices and inflation as the U.S. Federal Reserve raised interest rates have been linked to its suspension. Abiodun Kayode Ali, an economist and tax manager at Pricewater PwC, joins me to discuss this. Now, Abiodun, thanks for your time. And let's dig in deep now. What could the minister mean by her reference to unfavorable conditions?
Good evening, Sulaiman. Thank you for having me. So what she simply was referring to was the cost of borrowing, right? If you look at the current times, we issued that initial bond, the one with respect to about 8.3% costs, the 1.25 million euros. It was issued in March. $1.25 million. The Eurobond was issued in March, and it was issued at the cost of 8.35%. So currently at the moment, it's trading at the secondary market at about 10%, which is kind of high. And if you consider most of the advanced economies of the world, they've actually raised their rates. So what this simply means is that most investors are actually carrying out their money. You can see capital flying over to those advanced economies. So if Nigeria is trying to borrow at this point in time, it's going to be doing so at a very high cost. So that's exactly what the minister was referring to at this point in time.
And are there other options, open to Nigeria to plug fiscal deficits and balance the earlier planned $6.1 billion overseas borrowings scheduled for 2021?
Okay, yeah, that's a very interesting question. So if you think about it, we're looking at the deficit here, right? You're looking at it in terms of either the expense or you're looking at it also in terms of the revenue. So if you focus on the expense, you realize that there is a huge chunk of that deficit that is being accounted for by the subsidy we pay. So if you simply reverse that subsidy amount, you'd realize that we don't necessarily have to incur that deficit. But if you consider that we are in a pre-election year and the government would try as much as it can to please the populace, yes, we do have to go on with that subsidy. So if you also consider some of the costs that are being incurred by the government, I mean, last year there was this concern that the government was going to spend about $1.5 billion in trying to refurbish some of those moribund refineries that are not producing, right? So if you look at some of the things that we're actually spending these monies on, these are some of the things that are giving rise to that significant deficit. So if Nigeria can actually address its spending, right? And sometimes you could also want to consider options and alternatives, such as the public-private partnership. It would be of good benefit to Nigeria if you involve the private sector and you are working in collaboration with the public sector, you'll be able to achieve more. If you also want to look at it in terms of revenue, there are a lot of things that the federal government can do right to increase its revenue. So we know that most of the time when we discuss revenue, one thing comes to mind, taxes, right?
Now let me quickly jump in here now that we're talking about revenue, if we can quickly just do this before I let you go. How is the domestic fixed income market doing at the moment?
Okay, so the domestic fixed income market is actually doing fine. If you look at the recent increase in the monetary policy rate, you can see some of the signs or some of its impact actually taking off in the fixed income market. At the last auction, we saw 364 day trading Nigerian Treasury bill instruments trading at about 6.49%. And this has actually been on the increase. This is actually an improvement from what we had in the past. So currently, things are actually doing fine in the fixed income space.
Well, Abiodun Kayode Ali, many thanks for your time.
Okay, thank you for having me.